Welcome, of course, to our second and final show of the week. Trading Buddies, thank you for being here. Thank you for being our Trading Buddies. And, of course, Ash will be here very, very shortly to give us an update on all things FTSE and what the Fed had to say overnight. And it does appear that the market has reacted ever so slowly, I thought, but it is kind of showing its colours now in dollar strength, and we're seeing that pretty much across the board. Don't know that the statement said anything that wasn't expected, but the market says this is the way we're going for now anyway. Let's see if that's sustainable over time. Rightio, had you taken, or had I taken, the pound US dollar breakout on Monday, we'd be doing okay. Well, would have done okay. You'd be out of it now, but you would have got your 1-to-1, so it wouldn't have been a crash hot trade, to be fair. But it would have been profitable, certainly. Friday's range high was there, and Monday's range, I think at the time, was probably there. And I think that was about 75 pips, if I'm not mistaken. I thought it was 75 pips. Anyway, you would have taken your first take profit there and move your stop loss to there. And that would have been it, because you would have been taken back out. Then you got a beautiful double bottom sitting here. And then, of course, the Fed. And the Fed has made a difference, as it often does. I didn't take the breakout trade. I'll show you why. Well, I'm not going to take a pound breakout trade today, obviously, because the market has indeed broken. And I don't see any way to trade this at the moment. Monthly pivot dead ahead. I'd expect that we'll have a little bit of oscillation in here, maybe some consolidation, or it may go straight through the monthly pivot. I'm not of that opinion, because I don't think the statement was that strong, to be honest. But I'm no economist, and I'm certainly no fundamentalist, and I'll defer that one to Ash when he comes in and see what his read on the Fed statement was. But no breakout trade today. I think it's already gone, and the chances of getting another breakout are slim, in my humble opinion. Very, very quickly, I did take an order this morning, a trade this morning rather, on Aussie Yen, and I have closed that trade. Maybe foolishly or maybe prematurely, but here's what I was trading. I was trading pretty much the lower high off the weekly and monthly pivot on the daily chart. Look, I still think that's probably there, which is kind of why I'm struggling a little bit with my decision to move my stop to entry. But I'll show you why I did that. Those of you who can't see the order, look, there's a whole lot going for this, to be fair. I think it's got downside ahead of it. I like the fact that we've had 3 little Indians here. That generally means a break to the downside. But the daily chart gave us the opportunity to trade the bounce off the weekly and the monthly pivots. And it gave me a bar that I like, which, of course, has got a green body and a high test bar. So it was just an automatic trade for me. Why did I move my stops to entry? Well, here's why. Because of this consolidation here, we had ample opportunities to break short. And it didn't do that here, and we've just gone into consolidation. What I read there is, if X hasn't happened, I want to know why it hasn't happened. And it's probably pretty clear that we're at a support level, and that's probably what the market's struggling with, to get through that level there. If it does, our first take profit, which was down here, I would say is kind of going to get hit. I'd be absolutely willing to get back into this if we got back into this vicinity, back up around the daily pivot with a retest. That'd be handy, give us another lower high, and it would kind of give us another lower high off the top of that range there. So I'd be happy to do that. If this market now goes short without me, will I be disappointed? Yes, I will. But, you know, I think I've done what makes me comfortable, and that's very, very important if you want to if you want to stay long term in this business, you have to be comfortable. And I was comfortable with that decision to really prevent price from breaking out to the high side of that range, which it may yet do. Because we are at that support level, as I say. I'll leave it at that for now, but I will be looking for another entry short on Aussie Yen. I think from no fundamentalist, right? But fundamentally, I can't see why the market would want to be in a risk-on scenario. Ukraine, throw that in there, I suppose. That could boil over. I don't know. The Russians are talking it down, but why have they got 127,000? Where'd that number come from? I don't know. But 127,000 on the border. They're going fishing? Doubt it. They're there for a reason. And if nothing else, they're threatening. And all the civilians in Ukraine are arming themselves, apparently, if you believe what you read on the news. And there's a big call for the Aussies to get out of there. The Australian government has released a statement saying that if you're an Aussie and you're in Ukraine, get the hell out of there. They must know something. Greetings to you, Paul P. Happy Thursday to you as well. Of course, it is quiz day today. And John will be in here very, very short, well, in a half an hour or so with the quiz. Let's get through a little bit of housekeeping. Today, I had two game changer bars. They were on pound CAD. Pound CAD number one. The daily chart was telling me that this was a game changer bar to the high side. There would be not a snowflake's chance in hell that I would trade that. Top of the range, weekly pivot, it's a no for me every single time. I've probably got a bias to the downside as well. I've got no qualms about saying I've got the CAD way ahead of the pound in my relative strength list. Not showing that at the moment, but I'm more than willing to trade this short if I get the opportunity. And we are bang at the top of that range at the moment on the daily chart. So here's what I'm looking for. And this could well have been trade the breakout bar if it were not for one thing. And the one thing is the daily pivot. What I mean by trade the breakout bar is not to trade it long, but to trade it short. Reason, if this breakout is not real, then the buyers are going to get their ass kicked when the price comes back through here. And for that reason, I think the bottom of the range would have been a nice target on an entry there, stop loss there. Stop loss has been taken out, so you probably want to move that to there if you were thinking of taking that. But an untested daily pivot below me suggests that the long is still in play. So price comes back to here and bounces and then goes. I'm in a whole lot of pain. Don't want to be in a whole lot of pain, but I would definitely be willing to trade this as a lower high. If price comes back into here, it doesn't hit the daily pivot, but pulls back, let's say, to the weekly pivot and top of the range, which is one and the same, and gave me a nice reversal bar that looks something like that with a nice green body and a high test off that weekly pivot top of range. That'd be very, very nice, but I'd need to have room to take profit before the daily pivot was hit. So that is definitely still on my radar, pound CAD. And interestingly, as I say, it was a game changer bar, not short, but long. But then so was that one. And so was there was one before as well. Can't quite see it. There must have been on a weekly chart. So I'm not willing to trade pound CAD long. If it goes, it goes. Happy days. But at this point in time, I'm a bear pound CAD. The other one was dollar CAD. And it had far better credentials, without a doubt, for the long side, especially given what the market was threatening to do. Tough for me to trade that long from a technical perspective because it looked very much like a false break coming back into that descending channel. There's a whole lot of things you can read into this, like there's an inverted head and shoulders there. Where's the neckline? It's pretty ugly. But, you know, potentially there's a range that's forming there. I wouldn't be technically trading that long. In fact, I'd be looking to trade it short. The market has said no to that with the reaction from the Fed's announcement, and I'd have to respect that. So this is a no for me from now. But the game changer bar was pointing in the right direction. There it was. Hadn't quite come off the weekly pivot, but I suppose that is irrelevant at this point. There's a stronger indication as to why I don't want to go long this pair. But again, now it's very, very tough because the market said the dollar is going to be strong. There's a clear head and shoulders here. The neckline has been broken, but now it's been rebroken. So that kind of takes the head and shoulders out of play, kind of takes my descending channel out of play for the moment as well. And I really can only see upside here at the moment. That said, it may have been overlooked, but the Canadian government, or the Bank of Canada, did pretty much exactly the same thing as the Fed did overnight. In fact, I think it's almost word for word the statement. Not that I've read both in detail, but the headline looks very, very much the same from the BOC as it did from the Fed. So it might be a good battle, this one, dollar versus the CAD. But of course, the dollar being the superpower that it is, may well have more support than does the CAD. Oil prices going through the roof again. So new highs on oil. This has still got prospects, I think. Aussie CAD, pound CAD, get it right, dollar CAD for the shorts. We've already been to pound CAD, but not yet. It's not showing me exactly what I need to see. But head and shoulders, lower high off the monthly pivot. I'm going to have a look at that if it does pop its head up. What else they were the only two. I had a very, very in-depth watch list at the beginning of the week. We'll go through that in a little bit. In fact, probably after the quiz. There's no trades on offer at the moment. I'll repeat, if you've just come into the room, that I am now out of Aussie Yen at entry. So I'm looking for another one, frankly. And, you know, from my mind's eye point of view, I can see this going back up to here. And that's where I'll look for the second entry to go short again. Looking at this level, which is bang on the daily pivot. So if I get a lower high in here, I'll be pretty happy to go short. Again, we shall see. So until I've got something more to look at, apart from, look, there's a whole lot of stuff that was on my watch list from Monday that we'll go through a little bit later after Ash and after the quiz, but no trades at the moment, but still looking for this one. I think my favorite is going to be, frankly, pound CAD, if I can get that lower high on this chart back into the range, lower high. I think that's going to be my trade if I can get there. We shall see. G'day, Ash.
Hello, mates. How are you going?
I'm well, yeah, I'm okay. Yeah, I've had a little bit of a struggle, an internal struggle with myself over this Aussie Yen trade that I took this morning. But I'm out of it now, and I think I'm okay with that.
Yeah, I think it's going to be. I've got, probably something similar. I've got an internal struggle with myself going on whether I want to go short on the FTSE. I think the markets reacted badly, really, to the Jerome Powell address, which I think was maybe expected to a degree. I think there was some anticipation that he might be a little bit more dovish, but he wasn't. I've already heard, I mean, the optimism is amazing. I've heard one commentator come out and say the reason he was so hawkish this time is because then if he raises interest rates only 3 times rather than 5, then it's actually really positive and we start to see an equity boost. But I think that's yet to be seen. He sounded like he was putting the nail in the coffin to a degree. And
that's kind of what I got out of it. But, you know, as you said, and I said earlier, unexpected. I wouldn't have thought so.
No, it's. I mean, that's what he said he was going to be doing, didn't he? And it was really the numbers that he focused on, which is interesting. And now we are pushing towards the 4, possibly 5 interest rate hikes that everybody's now talking about pricing in. may still not happen. And we have to recognise that that we're talking about interest rate hikes that go throughout the year, and the year's a long time in the market. So things might change as we go. The data points might change as we go. One of the things that he was really keen on emphasising was the fact that the labour market is now healthy enough to be able to withstand any rate increases. So if that changes, then maybe we start to get a slightly different position from the Fed. And it might be that he's basically front loaded it. He might have front loaded it and said, it's going to be a nightmare for you guys. I'm raising interest rates. I'm tapering the balance sheet. That's that. So that means that, if we get to, I don't know, let's say the second quarter and he says, actually, it's not quite as bad as it's not as bad as I thought. So I can't raise interest rates quite as much as I'd hoped to. Then equities will get a bounce from there. Paul P.
Statement is hawkish before, haven't we?
What's that? Sorry.
We've kind of seen that before.
Exactly.
They did, and then they didn't. Then they were going to, then they did.
Absolutely.
We got two instead of four. All that sort of stuff.
Yeah. The other notable thing is they haven't moved yet. There's still some time to change right between now and March. Paul P's asking about how do you know if the statement is hawkish or dovish. And it's just bull bear. Think about it as bullish or bearish in the same way. So dovish would mean supportive for the economy. So it would be a accommodative statement, i.e., we are going to be buying bonds, we're going to be printing money, and we're going to be lowering interest rates. That'd be a dovish example. And hawkish is the opposite of that. It's tightening. It's the tightening phase. We're going to be raising interest rates. We're going to be reducing the balance sheet, and we're going to be taking away the bonds. So it's just another term. Like, bullish means going long, bearish means going short, dovish means a tightening phase. Sorry, dovish means a loosening phase, and hawkish means and supportive, and hawkish means a tightening phase, which wouldn't be quite as accommodative. Now, the FTSE, there may well be a trade on the FTSE. I'm like you, mate. What you were just saying about the trade with the Aussie Yen, I think it's really interesting because I've been in a bit of a similar position this morning where if we see my screen here now, is that screen one? I want to do this really. If I do this, then you can see that the FTSE 100 here. And look how different this is to this. So this is the NASDAQ. This one's the NASDAQ. Not bullish at all. This is the FTSE. Incredibly bullish. I think this is the short here. I think that there may well be a reaction to go shorts here at 73.90-ish, somewhere around there. So that's where I'm going to look for a short. If it, when it pops up here, it looks like it will pop up there. When it pops up to that point there, I think that there's a chance that we could get some pips out of this. You can see that there's a little gap here, and it might just come back down and just nestle in that gap somewhere. So that there looks like the target on the FTSE to the downside. And you can see the daily pivot and the trend line look like looks like 74.90 is where we're looking at. So we're currently at 74.75-ish. So another 15 pips, and I'm going to look for a short on the FTSE 100. I still think that there's going to be enough people out there, enough bears out there to think, you guys can go as confident as you like, but that was a pretty that was a hawkish statement. You're back to that word again. That was a hawkish statement, and that's not supportive of the market. What's kind of interesting to me is that when we do look at the NASDAQ is right on longer term support. This is what we got with the NASDAQ. That could be then the neckline there. That looks to me like there's the bump in the left shoulder. That looks like the head going up here. I'll draw it just to make it a bit clearer. Over here.
G'day, Jovi or John.
Let's hope my system comes back today. There we go. So looks to me like there's the bump there. There's the bump there, and we're still looking potentially at that. So technically speaking, and this is always the kind of the question that that I ask myself is, am I on support or resistance? And if I am on support and resistance, I do think it would go through there. If I'm on support and resistance, is it going to hold or does it go through? Well, the technical assumption to start with for me is always that it's going to hold. That's what I always look for. It's going to hold a position. However, the second question about whether it's going to fail or hold comes down to why. Why would it fail or hold here? And at this stage, it's difficult to know why it's going to hold. The only what I would see happening with the Nasdaq is some bumping along a little bit. While there is some digesting going on, so a little bit of bumping along, and then looking for some new data that may well support the fact that the Fed won't raise interest rates. Let's say we get a really terrible unemployment number. Let's say ISM next week is.
Have the big three reported yet?
The big three?
Yeah. Apple, Microsoft, Facebook.
I think Microsoft have. Apple, yes, Apple did overnight. I didn't check the numbers actually, but yeah, Apple did overnight. Facebook, I'm not sure, but I can check for that, mate. That's a good point. But I think that when it came down to it, and Tesla has also did report yesterday. But yeah, I mean we can certainly check on that and see whether it made a difference. You still looking at my FTSE screen? You should the Nasdaq.
Yeah, Nasdaq.
Okay. Let's have a see if there's any headlines and on Apple. Apple latest results is quarterly earnings results. Oh no, that's no good. I'll have a look, mate. I'll have a look. That was one thing that I didn't read yet this morning.
Yeah, I kind of thought that might be a directional finder for the market, or for the Nasdaq market anyway. Oh,
it might be tomorrow actually. Apple earnings tomorrow. So yeah, I thought it was overnight, but yeah, it was. Looks like it might be today instead, later today, possibly. Maybe it's after the close. But whether that'll make a difference is, that's another kind of question about it. Will the Apple earnings make any difference? Looks like the FTSE's at the level now. Right. This may well be a bit of a danger. It looks like the market's pretty hot here, but so it might end up being a bit of a dangerous short here. But I'm going to take it on, mate. I'm going to sell the FTSE there, and I'm going to sell it on my other account as well.
If you need a break.
Yeah, well, no, we should be okay. That's pretty much all I've got right now. Anyway, mate, it's just that we're looking at markets that need some. The S&P might get a little bit happier. What is currently quite notable as well is what happened to gold and silver. Now, I'm still really bullish on gold and silver. And the question is, does this create a buying opportunity? Gold boosted to the upside. This is the way that we would always look at markets. They breathe in, they breathe out. They breathe in, but they breathe out. And this one looks like the market is very much breathing out.
Nice channel.
Yeah, really nice channel, isn't it? So there's the low there. There's the. Oops, I didn't want that one. What I want is this one here. Here's our low down here. There's the low. And we're going to come up. We're going to breathe in. We're going to breathe out. We're going to breathe in and breathe out. We're going to breathe in, probably here actually, and breathe out. And then we're here, breathing out. So here we've got the higher low there. And then we've got another higher low here on the trend line and on the pivot. So this is quite an important area, and this is where with technical the technical picture, again, this is where you get in, and all you got to ask yourself, or all I'd be asking myself now, or all I am asking myself is this going to break or is it going to hold? at this particular level, and then why would it break or hold here? So what I want to see with gold, something similar to the Nasdaq, I want to see this bumping along here, bump along for a little while, maybe a day or so, and then what's the next data point that could drive this back to the upside? Because a weaker employment number is probably going to drive the gold chart long. So that's what I'm currently doing, mate. That's what I'm looking for. You know, I think gold's really interesting. I think silver's interesting too. Another one that would be you know, something that I would take on to add to. I've already got one position down here, not on this account, but on my other account, I'm holding on, and I was looking to add at 23.60. Now we are beyond that, so I didn't need to get that price, but now we're at this price. It's possible that somewhere along here there could be another trade on. So I think these are buying opportunities if you still like the product. And the question really is, you know, what makes you like the product? So that's the ones I'm looking at. Anyway, mate.
All right, mate. I will go back and have a look at the week that was thus far, or the week that is thus far. Probably better way to describe it. I'm just having a look at the gold chart myself, and yeah, it's still under pressure for mine. I can't get terribly bullish until this level's broken, trend line's broken, and then perhaps, yeah, interesting as you say. All right, my bias today was with Aussie CAD short. Let's go through those. It's a little bit too late for that now because we're now right down to the bottom of that range. So I will probably switch allegiance if this doesn't break, or if it does break and we come back into it. Tough from a fundamental point of view, I've got to say, to be long Aussie CAD, given, as I said, the CAD were pretty much as hawkish as the Fed yesterday, exactly the same. You know, the ditch quantitative easing, definitely looking at interest rate rises, probably early as next month, and oil's through the roof. So it's pretty tough to be thinking short anything that's got or short CAD, let me put it that way. So yeah, this one's probably gone for the day. Aussie Yen, you know about. Euro Yen short. I was a bit bullish Euro Yen early in the week and placed two orders, neither of which triggered. And as I said, yesterday or the day before, in my Telegram group or in Trading Buddies Telegram group actually, that I had switched allegiances, and that was primarily because we had hit the top of this range and we were looking to trade off a lower high. Didn't really come the opportunity to trade that short, but here we are again down to the bottom of that range. Now we turn our attention to what happens next. If we break short and retest, then it's probably a bearish scenario. But if we do similar to what we did here and either bounce off the bottom or go through the bottom, come back into it, then I'll be looking for a higher low to go long. Not there at the moment because that short scenario has played out. That leaves us with pound Swissy. That was on my watch list today, and I was looking for a short on pound Swissy. That may yet play out. Where is the dash thing? Pound Swissy. There we go. So still looking for a short pound Swissy. It's not firmly in my book, but I'm looking at this level here and the pivots close together. So what I'll be looking for is price to get above this level, maybe hit that white around about the 1.459 mark, I think, as I had it. Then come back underneath the pivots and retest that area. I think an entry under there short works for me. Not really super committed to it, but that was definitely on my watch list as well. Going back to the weekly watch lists and the game changer bars for the week, we had, let's quickly check out on the weekly ones and see how they went, how they performed. I hate it when that happens. And the first of them was Euro Aussie. looking for a long Euro Aussie. The game changer bar suggested that would be the case. There's the game changer bar. And I think I said in one of my posts, either Tuesday or yesterday, that the market had started to move, yet come back in a lot of these situations. And that's not unusual when you're looking at a big announcement upcoming, in particular what we were waiting on, which was pretty much the Fed. So we did get false breaks all over the place. This was one of them, but still suggesting that that could go long, and I'd be happy to do that if I got a scenario that worked. I don't know that there is one at the moment. We're at resistance. Well, probably trying to form resistance at the moment. It's not a place I want to go long at resistance. If we came back to the pivots and maybe reacted off a support trade line, which would come through here, that would work for me. Pivots are very close together. That suggests that price won't go too far away from them either. That's Euro Aussie. Euro CAD, of course, I am a massive bear Euro CAD, and the game changer bar suggested that we go in the reverse direction. The game changer bar, red bodied, and if it was in a different place, I might have got interested in it, but impossible to trade, as I said. Same thing. You would have been taken in. You'd probably be in a bit of pain now if that were what you chose to do. Euro pound long, and I did try to trade this as well, Euro pound, and now it has pulled back beautifully for us.
Off the nice chart, mate.
Yeah, off the weekly pivot. So I'm pretty keen to get back in, or to get back into this. The only problem I've got is this broadening pattern that I've noticed, and we've crashed through it, come back into it, only to the weekly pivot, which is the bottom of our longer term range. Don't forget, that's this one here. So we're coming right off the bottom as a false break, and that's exactly what we're trying to play, a false break of the bottom of that range. And it has presented now with this second bar. Do I want to trade it long as a trade off that is the question. Look, it's not the worst, but this broadening pattern does concern me. I've got to say, I want to see the next approach here before I look to trade it. I don't want to trade.
I saw the pound boost nicely to the upside against the Kiwi. I mean, the Kiwi's
my old favorite.
Yeah, you know, in a lot of trouble there, and I saw that chart. I've been watching that chart because somebody last week mentioned to me that they were looking at trading it. So I've been looking at that chart, and that got a really nice boost to the upside, pound Kiwi, and I didn't expect to see this on the euro. I'm surprised. Well, I guess the pound did strengthen overnight, so that's why the euro did come back again. But they're all doing this thing. Well, so there's a lot of charts, a lot of opportunities, actually, technically speaking. Gold, silver, not quite there, but this one I think is another example of a chart that, with a bit of a development, could be the one. You know, could be tradable.
Yeah, look, I've been sweating on it for quite some time. You know, ever since it broke through here, and I got run over when I took the first attempt, which was premature, I've got to say, but it did set up on a smaller time frame. But now this looks quite good to me, apart from this super resistance level that we've got ahead of us now, which is, you know, directly above the candle that I want to trade. It's really tough to trade into that, and there's a bunch of resistance here as well. So I've probably got to come from down here somewhere. Maybe that's right down the bottom. I don't know, but I can't jump in at the moment, I don't believe. But I'm looking for that very, very closely. A whole bunch of junk here at the moment, so nothing to trade. But if I got a false break of support, for instance, same as usual, then I'd probably look to trade that long. That was pretty much the end. Oh no, dollar CAD long was also a weekly game changer bar. I think I pointed that out before pretty much. And that would probably be the one that was the best. Again, tough for me to trade at that point, but as it turns out, that was the best of the weekly game changer bars. So you probably wouldn't have done any damage on them had you traded them as such. It's always my intention not to trade them as such unless they're clear entries for me, but to wait and see how the week comes out. And if you get an entry that is in concert with those weekly game changer bars after a bit of a pullback. I think they're the most powerful ones that you can trade. So, yeah, look, I agree with you. There are possibilities upcoming, but at this point in time, I'm just happy to wait. There's Aussie Yen now looking to break out of that range to the top. That's going to make us, it's going to put a smile on my face if that does that, actually, because it means I've read the chart right. And I'll be looking for another entry up here. Ash, I'll ask you, from a fundamental point of view, we know that this is a classic risk on, risk off scenario, trading Aussie Yen. I can't see why the market would want to go risk on at the moment, which is why I'm sort of keen to trade this until Ukraine sorts itself out, until I suppose the pending or underway crash in stocks sorts itself out, which is going to put fear into the market if it continues. There's no question about that. I definitely see this as a sell opportunity based on that. I don't like to trade from fundamental point of view only, and which is what I'm waiting on the setup here. But your point of view on that?
My point of view is the same as yours. I think the timing might be an aspect, because we saw quite a brutal sell-off yesterday, and I guess a bit of a dead cat bounce on some of these is likely. But until the picture changes, then the picture's as you describe. I think the picture does suggest that we get further downside, and it may well be that the Aussie Yen gets drawn into that as well. Jerome Powell is you know, his statement was, "I'm choking this market." So anybody going long is speculating that won't be the case further down the road, which is probably right, but it's a big guess, you know. And what I'd prefer to see is some data which backs that up. You know, some terrible unemployment data. That'd be the point for me to go. To be thinking about long Aussie Yen as an example, or long on stocks or something like that, as perverse as that sounds, you know. Unless the economy starts doing worse in some respects, then I think the risk off is in play, and I think it will remain so. So it's more sell the rips than buy the dips, I think, at this stage.
Yeah, there's probably one complication in that. Of course, the RBA meets on Tuesday, and if they now, given the strong economic data that, the Aussie has produced over the last few weeks, if not months, if they now change their tune and pull that back from 2024 to, say, the end of this year, which is a lot of economists locally are predicting that to happen, the Aussie will have a short-term rally on the back of that, I would imagine. So yeah. Time is going to be everything here, as it normally is, but I think it's super critical at the moment.
Agreed. And we got Bank of England next week as well. They're all starting to stack up. You read the Bank of Canada's statement, which you said was similar to the Fed.
Very similar. Yep.
Are they all starting to move now? And as you say, the Aussie there might be an anticipation bounce here that the Aussie is going to be moving as well, and that's why we might get a bit of a rally with that. There's a lot of questions fundamentally that I don't think in fact, there's too many questions that you can't answer fundamentally to really kind of affect your decision, I don't think, at this stage.
So in other words, trade the charts.
I think so. Yeah, I think so.
Trade the charts. All right. Speaking of the charts, it is 1/2 the hour, and that means I can have a look at euro versus the dollar, because it's now tradable for me on the 30-minute chart. And the 30-minute chart is suggesting one thing and one thing only to me. Well, one opportunity, or maybe possibility. Maybe probability is not there, but the possibility of me trading this is kind of remote. Yet, if I were to see a clear reversal pattern here, and that would have to be a pretty bullish bar right now, and then a higher low on the back of that, I think there is a trade back to the daily pivot, which is clearly untested today. Momentum is an incredible thing, and generally once they get a sniff of US dollar strength, they're going to go through with that for a little while. So that would make that a very dangerous trade, in my humble opinion. But if it does set up, then experience tells me that the setup would be worthy of our attention, given that we do have an untested daily pivot above us, because there is a strong chance on a daily basis that the daily pivot will be tested. It'll probably be too late for me because I'll probably not be in front of the charts unless it happens very quickly, of course. But I need to see a clear reversal pattern here, followed by a higher low before I entertain the prospect of going long. Certainly no trade right now. Which means, drum roll, it's time to say a thumping Thursday and enter the Thursday Theatre of Thoughtfulness and say good day to Jovial John. Good day, mate. Oh, it's Marcel Marceau, not John. You need powers, I believe. Angel, are you on top of that?
Yeah, you give me the power.
Yep,
it's like
there you go, awesome.
It's yeah. Oh,
how you doing?
How am I doing? I'm doing fine. My car is not doing fine.
Oh.
Yeah.
Tell us more.
Starter motor has been a pain. So the last couple of days I've been testing.
So you built it with the hammer a few times?
No. I would.
It works.
It does work, but it starter in the morning it's great. It's cold, but in the heat it seizes. And I take my wife across the city. She has a new job across the city, so I thought, no, I'm not doing that. So it's been grabbed for a couple of days. So it's been. Yeah.
There's two answers, John. Three actually.
What's that?
The first one's park on a hill. The second one's don't turn the motor off, and the third one's take it to the mechanic.
What's that third one? What was the third one?
Take it to the mechanic. Take it to the car doctor.
Now, that third option is really good, but that links into today's quiz, so I can't say why that minute is not a good idea.
CPB agrees with me. Build it with the hammer. It works.
Now, back in the day, I would. Yes, back in the UK, my car, I would do that sort of thing. But here, it probably fall off. I don't know. It's quite an old car. I refuse to buy a new one. Even better with the spanner. Okay, today's quiz, because of that, is a little shorter and it's a little different.
Okay. Should I be worried?
Jeff, it's right up your street.
Of course it is. But set in what bar?
I can't. Oh, here we go. Let's continue. Yes. That one.
Right, everyone, participate in this. Put your answers in the chat box. Okay.
Okay. Let's hope you all had a good night's sleep and your hearing system is right on the money.
Oh.
Okay.
Went through a laptop.
Turn up your radio.
My apologies for today's quiz. It is very short. If you wish to sort of think abstractly some of the things you are about to hear, I'll link into things that are going on in the market if you're thinking like that. But I'm going to play. It's going to be Guess That Tune. It is fair.
Cool.
It is fair. It is all checked out copyright, so we're not breaking any laws. None of these songs are in copyright.
PB's in the room too.
Luckily, I checked all of that beforehand. It was a deja vu. The things you do when your car doesn't work. Okay. I'm going to say, which song did I just play? That is the title of each question. Obviously, I haven't played it yet, unless you're inside my mind. But here we go. Here's song number one. This is not dangerous. Everybody should get this one. No pressure.
It's lucky you played that one, John, because I didn't know at least two of the other four.
Indeed, I would have been hopeless. Cow jumped over the moon. Might have got that one.
The cow jumped over the moon. Obviously you don't work in primary schools. You'll never have. Oh, we go. There we are. Twinkle, twinkle, little star.
Hang on, hang on.
I've done it again. Jeff, I know. My apologies. I should have got the hammer on my computer instead. Yes, it is Twinkle, Twinkle. Which song
This is tough today.
Yeah, it is tough. It's tough to know John's repertoire. I think we're all going to get a full house here, John.
We should get a full house. Yeah, well, there is a reason economically why I teach these. Got these songs. I teach these to my students, and they think I'm nuts. I said, I guarantee you, people will ask you to play these.
That's true, actually. Yeah. Oh gosh.
Okay, here we go. This is something that is very topical at the minute.
Okay.
Uh-huh. I won't play the whole version.
We'll be having that soon. The Super Bowl is in 2 weeks' time, so that's going to be everywhere.
That's in honor of Jerome Powell and his gang. Maybe they.
Yeah, very good. Yeah.
Want to be in there too.
Mahomes is back, Jeff. Mahomes is back.
Oh, okay. But no.
No Brady.
No
Brady's out. Brady's out.
No Bucks.
No Bucks, mate. Brady and the Bucks are off.
Linked to why your answer of take it to the garage is not an option for me at the minute.
Okay.
Very nice melody.
That's a classic.
I've got to say.
Most of my students are Chinese, and if they don't play this song, Grandma will get exceptionally angry.
I've never heard of it.
No, me neither.
But I like the melody. Very nice.
I play it a lot. Okay, and our last song today.
Yeah, I think I'm going to have to go with that one. The fact that you put the traditional version was heard.
Oh yeah.
Was that a hint?
This is like a new song every year, and even though obviously I am English, I more or less live in the Malaysian Chinese community, so this is why my car can't get fixed. This weekend is Chinese New Year weekend, and then it's holiday next weekend. All the mechanics are giving it, going home. So no car, so no hammer.
Ting saying the song title is Gongxi Gongxi.
Yes, my apologies. Yeah, I know I probably get it slightly wrong, but later on when I have to play it, I can get the song right. There we go.
Thank you, John.
Quiz. Nothing. Really
Bit of light relief. That's quite nice, you know.
Yeah, it is light relief. Yes,
light relief as we go into the end of the month, and this is the other factor we haven't really taken into account actually, Jeff. We looked at all these charts, and we're ready to actually get monthly closes on a lot of these as well.
Yeah, first month of the year, of course. I'm not so sure that that's super relevant. Is it going to be relevant this month?
Oh, it will be. But do you know what? I mean, it's one of the most bandied around sayings in the stock market is how goes January, so goes the year. So if the stock market has a bad January, the suggestion is that the year is going to be bearish, you know, and obviously if it's the reverse of that, then it will be the reverse of that. So
okay, well maybe that's worthy of talking about. Why would it be easier if you were tone deaf, Dennis? Easier if you toned. I thought John hit every note. That was beautiful. Show me how that's going to work out then, mate.
Okay,
With
yeah,
your
let's
charts.
have a look. Let's have a look again then. So let me bring my chart back. Start with the Nasdaq, because this is clear messaging really. What we're seeing here. This is what the Nasdaq currently looks like. It's got a day left, and to start with, you look at this on a monthly. To start with, that's got to get back up to 15,576 on the futures to have not closed below this level. So as soon as the Nasdaq does close below that level, then it is suggesting that the downside is maybe even going to be from this point here. I mean, if we bring back that weekly chart, then it's the weekly that I'm looking at to suggest whether the Nasdaq is going to create that inverted, that head and shoulders pattern, which really gives us that. So that would suggest the Nasdaq is a lot higher if the monthly chart manages to close on this level here on the 14,500 ish level, 14,600.
So what was last January's candle?
Last January's candle?
Yep.
That's a good question. This one here.
It was suggesting downside didn't happen.
Yeah, I don't think you could say. I mean, you could argue that because it's a little bit red, but it's very indecisive.
Well, the pause bar, yeah.
Yeah, it's more of a pause than anything else. And okay, the market didn't come down.
Yeah, it really does need to make a statement.
Don't get me wrong. Statistically, I can't sort of like bring you a load of statistics and say this is how this generally plays out. But what I can say is that is something that is thought of as the market. Now, it might not be. We might not be, effectively looking at whether the market was bearish or bullish. So per se. But what we are saying, or what that does say to me, is this bar is a huge message. If it closes down here, it's a big message, and we're at a high. So this is definitely suggesting a difficult year for the stock market. Now, if we also consider and build on what created this story, then we've got a tightening phase going on, and we know that this was created by accommodative money. And we're about to not only reverse that accommodative money, but reverse it quite aggressively in the first, in 1 year, if things play out the way the Fed are saying they're going to play out right now. So this market's got a long way to run down, and it could be a very volatile year. If there are stock markets participants out there that are already well up over the last 5 to 10 years, this would be a year that I wouldn't be surprised if a lot of them saying, "I'll take it off. I don't need it. This is a headache." This is one of those years that actually makes our P&L look poor. It's not one of those years that's unfolding well, because this is already overvalued, regardless really of what the Fed do.
Yeah, technically, it shouldn't be there. That's a fact. The question remains, I suppose, and we always come back to it: where the hell are they going to put their funds if they take it out of these markets?
Well, this is where bonds start to come back into play. This is where we could start to see gold, and this is why I still think that gold is a great place to put your money. And this all of a sudden has got exciting again. What's happened with the downside over the last day or so with gold. This has got exciting again. I still think that these are the areas that are going to be of interest. Now, of course, you've got other things as well. I mean, I suppose it's also, if you are a stock trader, you're looking through the list and saying what gets affected positively by interest rate hikes and what gets affected negatively. And of course, banks would be something that you'd say, the bank's profit margins should be healthier. With interest rate hikes, they should be healthier. So people would be starting to move towards those more cyclical aspects of the economy. Home builders, they're not going to do so well. You know, their costs have already all of a sudden gone. Well, all of a sudden will be going a lot higher.
Yeah, they're bad enough now.
It's not that the money's coming out of the stock market. It would just be moving somewhere else. And because the NASDAQ, specifically the NASDAQ, is about growth, and you know, as relied on companies that have benefited on free money and a lot of liquidity. It's the NASDAQ that, if you were thinking of a short, and it's almost the most obvious trade that you can see this year, you go out to buy something and sell the NASDAQ alongside it as the hedge trade, because this particular, I mean, the FTSE is a good example. You could buy the FTSE and sell the NASDAQ. Now that would sound crazy to anybody over the last 10 years. But this year, I think we might see a different story. I'm not saying the FTSE is going to explode to the upside, but if you think about how the FTSE's made up, and what sort of industries the FTSE's made up of, you know, FTSE's top companies are the likes of Shell and BP, HSBC, to name a few, you know, or Barclays. So, okay, yes, you do have the likes of Rio Tinto and you have the likes of AstraZeneca, but the oil and financial sectors are probably quite well equipped over the course of the year, whereas the tech sector, not well equipped at all. You know, as I say, it relies on on a cheaper environment. So FTSE long, NASDAQ short. I wouldn't be surprised if people are going towards that particular trade this year. So it's just that, as I say, money won't come out and go nowhere. It will go somewhere else, and it's going to be interesting to see where it starts to revolve to.
I'm trying to get my head around the IT or techs.
Yeah,
got nowhere to go. From a chart perspective, I totally understand what you're saying, get it. But from a where are we in the world scenario, I kind of think, well, I don't see this stopping anytime soon. In fact, you know, the more issues that are thrown up to the world in terms of, I don't know. Oh, I've got paint all over me. I was painting before, sorry. In terms of issues like climate change, for instance, tech's got a lot to do with answering that. Yeah. Because it coupled with green energy, if you like, you know, the tech side of that, to turn that green energy into power.
Yes.
It is big, you know.
Yeah, I totally agree. I mean, what the companies themselves are undoubtedly attractive propositions, and they are things that you'd want in your portfolio. But I suppose if you ask the common man to go into a store and see a solar heating unit for $5 and a petrol heating unit for $5 one day, they're going to buy the solar one because of the things that you're saying, you know, the sort of some of the world issues. But then over the course of the year, you see that solar heating unit go up to $15 and the petrol one's still staying at $5. There's going to be consumers that are going to the cheaper products. And I suppose that's the point with the tech sector, is that it's overvalued, it's too expensive. So yes, it is the answer to many things. But if in this current environment it's too expensive, people go somewhere else.
Yeah, that's true. There's no question about that. And dare I say it, you know, the more inflation bites and the more or the less wage rises there are, I guess people are put in that position. The higher oil prices go, people are put in a worse position because their net disposable income, for instance. Yeah,
but putting that in sort of, it does. I mean, really, I suppose the point is putting it in stock market speak. Most of this tech stuff doesn't pay. Most of these companies don't pay a dividend, and then you've got an interest rate high. You know, interest rates going higher, so you've got the free cash rate. You know, so if the free cash rate is now bumped up to 2%, where those NASDAQ companies weren't paying a dividend before, they've been squeezed even more because you get free money from the bank, let's say. So and risk-free money from the bank. And that's why people would start migrating out of there, because they're going, well, why would I bother? You know, if the growth isn't going to be quite as expansive from this high point, then, and I don't get paid any dividend, why am I keeping my money over here when I can go over here where I've got, you know, zero or very, very little risk, and I'm still getting a return on my cash. So that's you know, back to the sort of like the stock market aspect of why people will be pulling out of the NASDAQ at this particular point. They'll be back in at some point, but at this stage, the NASDAQ has probably gone too far, too quickly, and there's just there's no decent kickback. There's no reason to hold the NASDAQ when you can go and get you know, some freebies, and investors will do that. Of course they will. They'll go somewhere where they're going to get some cheaper returns that don't cost them any risk. You know, they're saying to all their clients, "But we got no risk, but we're still getting 2% kickback. I know it's not beating inflation, but our money isn't going down as much as it would be if we left it in the NASDAQ, which is now tanking."
That's an interesting way to look at it, isn't it? We're not losing as much as we should be, or could be.
Yeah.
Interesting.
Yeah, exactly.
That is interesting. Let me consume that for a while and chew my cud over it. See if I can work anything out. Yep.
I'm just going to go back onto the FTSE now. The FTSE is looking very, very healthy now. So I'm not aiming for a lot here, but this is looking like it's going to get away, and I think the FTSE is going to go up here now. So I'm going to have to hedge this out. Anybody that doesn't hedge, you may want to close out position, but I'm going to hedge it out because I think that there's still probably enough to come down. But now, what I had to do a couple of weeks ago is flip position.
Hi LT, we're all good, thank you.
And sometimes you need to recognize when the terrain has changed, and this has definitely changed. This FTSE is now looking actually quite bullish. I mean, you look at that bar. Still think there's a chance of a bit of retracement. But what I will also probably look for is if it comes up here and does retrace to here, I won't be looking for profit because this market has changed. But I'm going to flip position. So I'm now looking for the longs, mate, instead of the shorts on the FTSE. I've changed my mind on this. I think the market looks pretty hot, and this first hour is expressing certainly a market which has enjoyed getting the Fed's speech out of the way and is now looking to go in the opposite direction. So market terrain, as I say, has changed. So it's time to flip positions and flip the way that this is going to be traded. And as long as this doesn't go too far, it's not going to be too difficult to fix it up.
Why is the market hot, Dash? Question from LT.
The FTSE's hot. I should say the FTSE's hot. The FTSE's probably, you know, what I was just talking about with the NASDAQ is really my point with the FTSE. The FTSE, you compare the UK's market to the American market, and this is where we are. Not even at back to the highs. You know, you're looking at another 5%, it looks like, before we even get back to the highest point. The NASDAQ, all-time highs, you know, and this is the point of the coronavirus. So since the coronavirus, the NASDAQ has, you know, it's got near to double in price. The FTSE didn't get anywhere near it. You know, let's mark this off here. This is coronavirus. FTSE's not got back to its all-time highs. So the FTSE has got room to travel. And considering what's going on in the United States, then the UK equities start to become really attractive. So the FTSE is running hot. The NASDAQ and the S&P, not so much yet. However, as I said before, this is an area of support. So if it's gonna cling on, it's gonna cling on from here. And number one, we haven't moved yet. So the Fed hasn't moved yet. It's just rhetoric. Number two, the year can change. You know, things can all of a sudden flip themselves around. So I wouldn't be all that adverse to buying the Nasdaq for a bit of a punt as well. You know, I wouldn't be too adverse to saying let's not put a lot of money in here, but you know, maybe give it a go. I wouldn't be surprised at all if by tomorrow this is back inside this area and people are now starting to edge the Nasdaq higher. I want to see that head and shoulders, but the reason behind that is not because of what the Fed said. It's more the fact that at this stage we're not there yet, and things can change, and I think there'll be speculators that are quite happy with that.
Mate, again, question from LT. He's removed it. It's gone. Suggesting a fake out.
What is in this? Is this going to reverse?
No, I think talking about the FTSE.
Oh, the FTSE. Don't know, mate. I mean, you know, I've been pretty bullish on the FTSE up until this point, and really, I'm only sort of trying to get a few pips out of this one, and so I'm going to come out if I get the opportunity. I'm only trying to get a few pips out of this one, but I still think the FTSE's got some room to go. The Bank of England are out next week as well, and that might change things, you know, and that's really where we are. We are now in central bank land, and we should be, you know, really aware that it's those guys that are driving the picture at this stage. So earnings and everything else may not come into play quite as much as what happens with the central banks meetings and data that drives their decisions.
Yes, I said that yesterday in my analysis, that we are not in technical land. We're in fundamental land, and we're being manipulated. It's a bad word. We're being governed by what these big dudes are saying at the moment, and what their attitude is. So yes, anything, you know, that you're trading technically at the moment, and I suggest you do. I've got no qualms about it. There's no problem taking the positions if technically they line up. But I think I'd be prepared to take early profits, if not, you know, watch the charts pretty closely. And if the charts are telling you that X hasn't happened, is my favorite saying at the moment. If X hasn't happened, then the chances of X happening have diminished somewhat. Yeah. And that was the case with the Aussie Yen trade, as I said before. And I'm kind of a little bit happy to see that it has rallied. And the decision to get out of it was a pretty good one at this point anyway.
Yeah, I think so, mate.
But that doesn't mean my bias has changed. I'm still looking to trade it short.
Yeah, I mean, it'll play. Those moves will play out eventually. You know, and but I do think it's interesting that the bounce we've had in the FTSE is aggressive, and we just had something pretty big move out of the way. So I think this is sending a pretty strong message that the FTSE is a pretty hot market right now. So as I say, I'm gonna try and flip positions and get into a long, probably around about this point here. If I can close this one, I'll probably just flip it to a long. But let's see how this ends up closing out. But looks to me like the FTSE is going to give us a relatively strong looking monthly close. After all this stuff, that's going to look relatively good. All right, a little bit indecisive, but relatively good.
Okay, if you're done, I'll wrap what I'm looking at myself, and we will wrap ourselves the heck out of here. Okay, a few things I want to mention. I think there are 3 strong possibilities for the rest of the day, if not into tomorrow. Hopefully you can see my right chart. I've got screens all over the place at the moment. You got dollar yen?
We have dollar yen. Yes.
Dollar yen, perfect. Right, got absolutely no interest in that. But let's go to where I do have interest. We suggested that pound CAD might come back into this range. Holy Toledo, it has come back into this range, all right. Looking for a bounce off the daily pivot, and then a lower high in here somewhere. Even back to the weekly pivot would be absolutely ideal. That's a 4-hour chart. This could happen on any time frame, of course. So just look for a lower high in here somewhere. If it is in concert with a trade line or something like that, for instance, if it were to come back here and retest that trade line at the confluence area, that'd be a pretty good signal to go short, because it would give you a pretty clear false break indicator. Now, I don't see that happening in one candle, to be frank, which is ideal, but I do see the possibility of that happening in a few candles. Just watch for that, because I think that would be an ideal place to find an entry short on pound CAD. May not get the opportunity. It looks to be absolutely sinking like a stone at this point in time. We shall see. Another one of those is pound Aussie, doing a similar thing at a similar place. This is probably more likely in some regards, given that we have got a very, very clear top here. So a strong resistance level. A lower high here does make sense, but you're going to get exactly the same scenario. In fact, it's better. I think the trade line's probably stronger. And if you can close below here and get a retest, daily pivot untested, that would make perfect sense to me to trade that short on the back of a lower high as well. So pound Aussie, pound CAD, exactly the same trade pretty much. If one of them sets up and the other doesn't, then the obvious choice would be to go with the one that does. There was a third, and I can't remember what it was. Was it pound Swissy? No, it wasn't. Oh, we've got to go back to Aussie Yen, haven't we? Yes. I've got to give you Aussie Yen and what I would do if and when and what happens. So it was pretty clear that we're in a holding position here when I got out of this order short, and it was also a clear option for the market to break out of this range in either direction. I was counting on short, but it's gone long, which is why I closed it. Usual suspects, if we get to the top of the range, come back under the daily pivot and bounce, give us a lower high here, then I'll look to trade it short again. This game changes if we break through this high, but until I do, I'm still a bear Aussie Yen, and I'll be looking for any opportunity to trade it off the top of this range. Don't know that I can get in before then, unless we get a high in here, which would allow for a trade line to come through there, hit the daily pivot, squeeze back underneath, retest it, then you've got an entry short. So that's pretty much what I'll be looking for as the day goes on. That's the third and probably final one that I have for the moment. Euro dollar, as I said, untradeable at present, but if I were to get a reversal pattern, which is kind of nowhere near it at the moment, I'd have to see a clear double bottom. When I'm on a 30-minute chart, that's unlikely because we've got to get up here, then come back. Or head and shoulders or something like that. It's going to take a long time to form. I'll be in bed by the time that happens. But if it does form, and like a double bottom, so up here, back here, you get a clear double bottom, then a lower high. If you're awake at that time of day, you might get a trade long, but to do the daily pivot test thing. But until that happens, there's no way I could possibly go long here. I think that's kind of where I'm at. Just trade the structures at the moment. I think if you are willing to do that and take early profit, I think you'll do okay. Otherwise, I think as both Ash and I have said, we are kind of in a fundamental scenario here, and that needs to be respected. So just trade carefully. It doesn't mean don't trade. It just means put your marbles on the table, maybe a few less than you would otherwise. That's where I'm at. Jovial John, thank you so much for your musical talents and the quiz today. It's been interesting, I've got to say.
Yeah, thank you to John, and of course, thank you to Angel as well for looking after us. Thank you to you guys.
Great to have Angel back.
Yeah, back. The dream team's back together again. Trade safe. I think this market probably could do with a little bit of settling down. FTSE's I'm definitely going to flip positions on the FTSE and go long. Yeah, as I say, trade safe and enjoy the rest of your week and your weekend, and don't let it absorb you. That's the big thing. And we'll see you next week. Thank you to you, mate, as always, for being my trading buddy, and enjoy your weekend too, mate.
100%, mate. I'll be doing my best. I think I've got a reasonably quiet weekend this weekend. Alison's away at the moment, so it could be an interesting evening here at home.
Oh yeah,
I'll keep you posted on that throughout the week.
Getting the Xbox out.
Yeah, what's that? I don't do that sort of stuff. I've got many other things to do. Guys, thank you so much for the week. Look, it's been interesting, I've got to say. A lot of caution on my behalf. That's primarily because of the situation we find ourselves leading up to the Fed, and now we've got to wait for that announcement and statement to be absorbed or consumed by the market. Just got to wait a little bit longer. I think maybe tomorrow might be a little bit easier, and certainly next week I think we'll have a clear run at new sentiment in the market. Perhaps we'll see how we go. Have a great weekend, everyone. Thank you for being our trading buddies, and it's bye-bye.